Hi there, a very good morning, good afternoon to all of you, depending on wherever you're watching me. This simply stocks, and I'm live in this live session with you all as promised around 12 in noon. So, today I'm going to talk about a very interesting company that came with an IPO just recently and looks very attractive at current levels. So we'll discuss about that. Plus, we'll discuss about the markets because on Friday we had a decent fall in the market. So where are we headed? What lies ahead for the market, and are we headed much lower? We'll discuss that, and I will answer your queries as well. So Priya, very good morning to you. Hello. Ashim, good morning to you as well. Hope you're doing well. Uh, and morning to all of you. And hopefully it's a good bright Sunday for you. It's raining out here, and it's overcast and damp. So we are looking forward to the winters, but I hope sun do break out because it has been 2 3 days of rains here. Afternoon, Ravi. Afternoon to all as well. So it's beyond 12. I just missed that out. So that's the point. So basically, the markets are doing its own things because of what is happening in Europe and US, and so we are seeing FIIs now selling in the market. So we'll discuss in detail as to where this all would pan out in the next 3 to 4 months, in my opinion. Afternoon, Gunnath and Bhupender. A very good afternoon to you. Hope you're doing well. Uh, So before we talk about the markets in earnest, just a few pointers about sports, which we do follow, and some of you do would be following. And I'm a passionate sports watcher, so I would like to say some words about it. The Indian women's cricket team has done extremely well by beating England 3-0 in their own backyard in the one day series. So that's a big thing because of the way England has played over the last 5 7 years at home. This is a big victory altogether. The men's team play Australia in the third and deciding T20 international today. Hopefully, the game goes ahead. Uh, so that looks good. Now, the incident, Ashim, I don't consider it as an incident. I knew that the question might crop up. I feel it's a run out. I think the batsman is cheating by not running 22 yards. So the bowler is in its right to take the bails off and run him or her out. I mean, that's simple as that. I don't think that morality or anything comes into play here, because if you are going to say that that's not legal or that's not in the spirit of the game, then how come a switch hit is in the spirit of the game, or reverse sweep is totally different and switch hit is different? So when you change your stance, and when you change your stance and hit a ball, being a right hander as a left hander, completely change your stance before a ball is bowled, that should not be allowed. There are a lot of things that batsmen do that might should be banned if a bowler is not allowed to take the bails off on the non-striker's hand. So they should be in their crease when the ball is bowled. It's as simple as that. So I don't consider that as bad as people think, and I've said that earlier as well. And it's good that the ICC has taken a note on this, and eventually what they have done is that it's not mankading anymore. It's called a run out, and it's as simple as a run out of any kind. So yes, it looks odd, but that is how it is. You have to run 22 yards to complete a run. You cannot run 18 yards after a ball is bowled, or 17 yards to get a run. And you need to understand that when a seam bowler is bowling, then on the other end, on the striker's end as well, the batsman is at least 2 to 3 yards ahead of the crease. So they both would run less than 20 yards eventually to complete a run, whereas a bowler cannot even overstep by half a centimeter. So you cannot have different rules for a batsman and a bowler. So yes, it's a good rule that has come in, and batsmen should be run out in that manner. All right, coming back to some other sports events. So Roger Federer has retired, and it was a kind of a big moment after 24 years with such achievements. Federer has retired, so now new crop of players should take over, like Alcaraz, etc. We'll look forward to that in the Australian Open in January. India have lost to Norway as expectedly in the Davis Cup about a week, 10 days back. So they are back in probably Group 1, or I think they are back in the Asia Oceania division. So that's in there. And the Indian football team will take on Singapore in a tri-nation football event, and they'll take them on, I think, on the 27th in 2 days' time. So that is something to look forward to. The World T20 in October, that is also something to look forward to. Hopefully, India get their act together in terms of bowling and get their, you can say, batting order in place in time for that event. It's going to be a tough competition, 6 teams, and all teams are extremely difficult on their day when the matches begin. So we'll see how they end up. And so, okay, they play Singapore, all right, Ravi, thanks. So they play Singapore and Vietnam in there. So they played the match already, so it's 1-1. I thought they play their next match on 27th, so they'll play Vietnam on 27th. So we'll see how that pans out, and if you know which channel is broadcasting that, do let me know. Hopefully Star would do that. I don't know right now as to who is broadcasting that one. Uh, so that's the point. So I'll discuss about this currency war thing as well. But before that, I'll talk about this thing about the markets first, and we'll come to currency immediately, Ravi. So let's come back to the market. So 17,300, maybe opening below 17,200 tomorrow, and maybe we'll head towards 17,000. Now, there are two aspects to all this thing. For investors, there's no need to worry. Investors need to put in the money now. This is panic situation till 17,000 that you need to put in the situation. At around 15 and a half thousand, it looked like we'll go to 14,000. We didn't go there, and we had a strong rally from there in major sectors. I think the same thing could pan out from 17,000, 16,950. So for people who want to put in the money for 18 months or more, there's no issue, and they need to put in money into marquee stocks like Asian Paints, etc. Any top-notch stock with low or no debt and high growth, high margin business, you get it at a discount in this phase. So you have to do that. For traders, now the point is, let the market close above 17,500 and take fresh positions. Simple. I mean, don't go by option data, anything of that sort or this sort. If you do intraday options or anything, then I'm not here to means to talk about that. I don't do that, so I won't be able to explain on that. But even for positional trades or 1 week trades, very short term trades, you need to see strength in the market, and the strength in the market will come in once the market closes above 17,500, 550. If it is not doing that, wait for that moment and then take positions from that very short term for a time frame. For long term investors, as I mentioned, 18 months or more, I still see by elections 2024 markets to be beyond 21,000. I stick by that. Even if it goes below 17,000, we'll see a strong rally because the earnings will pick up. So even if FIIs are selling again, it is not going to be another sell off of around 3 lakh crore or something like that. Yes, they will sell for a few days because of the 75 basis point cut, and the fact that the commentary from the Fed has been of that sort. But this thing will become very attractive. Basically, the markets will become very attractive around 17,000 till about 16,500 or so. So we don't know where this will stop, and that is why I'm saying that now your for somebody who wants to play long for very short term, uh, their target is 17,500. Beyond that, you take long positions, fresh positions, and let the market do its thing rather than becoming a Robin Hood and getting into the market now and then sulking at 16,900. For long term players, you have to start putting in 20% of your total amount now, 20% more at 17,000, and 40% closer to 16,600, 700, like that. Increase your investments as you go along, increase your investments below 17,000 levels if we go there. But I see 17,000 hold up. I see that 17,000 should hold and the market should reverse from there, although it's looking bleak at the moment. Coming to this currency war thing, that US is now attracting money, FIIs are exiting, etc. The issue here is that uh, simple point here is that India for FIIs are like stocks for us. So, for example, you have US, you have UK, you have France, you have Germany, and you have, say, a market in Japan. These markets are large markets. When we talk about large markets, they you akin that to something like a large cap company like a TCS, Infosys, Asian Paints, Pidilite, Titan. So if the investors in US or large investors think that in US or in these large markets the returns could be big, then there is no way they're going to invest into the Indian market. Now another point here is that, or in the mid cap markets, which are the emerging markets, say China, India, Russia, Brazil, or other markets anywhere in the world. So these things will always be up and down in that regard. Now the second point here, what I want to say here is that uh, the currency fluctuation is taking place because FIIs are exiting India big time, and they are putting in money in other markets. They are putting in money in other emerging markets in Western, in Central Europe, Eastern Europe. They are putting in money in Southeast Asian countries like Vietnam, etc. They have to put in money somewhere else. So they are looking at, for them, these countries are like different mid cap stocks or small cap stocks. So they are taking out money from some mid cap stocks like India and putting in money into some other mid cap or small cap companies, which are different countries altogether. So I hope you got the point here. So I think what will happen is, at this point of time, India is not that attractive. It's not very cheap, but it's not expensive either. So they want more cheaper prices for large stocks, for different companies that they want to buy into, and they are not attractive at all. So that's why they are selling. It's not that there is some sort of a currency war or anything going on. And once FII's outflow takes place, there is a burden on the currency, and we are seeing currency at 80, 81 rupees. And globally, global currencies have weakened, not that only India has weakened. So that is taking place, and that was inevitable. Now where India stands a good chance here are two aspects. One is that the high growth rate for the all these companies, even large companies or small companies, compared to companies globally which are growing at 6, 7, 8%. Here companies are growing at 15, 17%. Some companies are growing at 21, 22, 23%. Some mid cap companies are growing at 40, 50% regularly. Now what happens is, this is a very positive sign because earnings will continue to grow. So I have kept on saying that for FY23 the earnings will be closer to 850, 860 rupees. For FY24 the earnings will be closer to 960, 970 rupees. I think around 960, 970 is very much possible because of the kind of consumerism that is going to come back by the time FY24 comes in, because there are jobs that are being created, there are people that are making money. So what that tells you is that India as a market is becoming cheaper by the day as the Indian stock market goes down from an FY24 point of view. And that is why I'm not giving any strategy from 1 week or 2 weeks perspective, and this channel never talks about that. We could even go down to 16,500, and I'll keep on saying that that will be an even bigger chance to invest. But then the point here is that whether somebody has the money. If you have very less money, then wait for this whole thing to play out rather than put in money now. That's one thing. If you have, say, decent amount of money and you want to start allocating, this is the time to start allocating 20-25%. For FIIs, there are a lot of markets that are open, and there are at least 100 countries they can invest into. These are like, or at least 50 countries that they can invest into. These are like 50 companies of the Nifty that they can invest into, and they will keep on churning around. Now, where the catch lies is that there are a lot of sectors, different companies, a lot of companies where people will end up making money, and where FIIs will come in and buy into, where DIIs will buy, where large investors will buy, because earnings trajectory will only grow there. And now that is where I'm going at the moment with this stock that I wanted to talk to you about. So this stock is in the you can say the travel space. Now the travel industry has been marred over the last 3 years. These stocks have come back, but they're no way to their levels in terms of their earnings that they're going to grow into over the next 2-3 years, uh, to what they could be by 2025. One of these stocks got listed probably a year back, less than a year back, and this is Ease My Trip. In my opinion, Easy Trip planners or Ease My Trip is very attractive at around 380 rupees. Yes, it is 25 times FY23 earnings. Yes, it is 60 times, you can say, in terms of P. But look at the growth. Look at the kind of growth the company has shown over the years. Look at the kind of profit growth, sales growth that the company is showing. In the June quarter, it gave, you can say, sales number of around 80 crores, 88 crores. In June, they did a sales of 88 crores, whereas in June 2021, which was a very difficult quarter, I understand that, they did around 31 crores. Now, what is happening here is that they are gaining market share and they are expanding into their you can say air passenger vehicle air sorry air ticketing business big time, and that's where the growth is coming into. So if I talk about product segment, then in air passenger or air travel thing, they did sales of around you can say 79 crores versus 31 crores. That's a huge jump. And even from 2019, they have grown by around 40%, and 2019 June was a clean year and they've grown by 35-40%. So this has been a tremendous performer. Now the stock after listing went up big time. So post listing, if I look at the stock, it went up sharply uh, over a period of time. So what happened was, post listing in 2021, it was around 100 rupees. It went up sharply to around 300, 330, then consolidated and have given another breakout. Now around 360, 370, it's a big buy, because around 360 or so, it would have a market cap of around 7,500 crores. It would be at a PE of around 62, 61, 62. A company that is growing at 50% CAGR, 45-50%, cannot trade at 60, 62 times. And it is one of a kind of a company. In this regard, I would not you can say delve into giving you targets as such. But if you look at the margins in 2020, before the pandemic, the margins were around 62%, 60 to 62%. Currently, even in difficult quarters, their margin is closer to 50%. So I think they'll go back to 60% margin in a couple of years. The numbers will only improve from here. And what I can say here is that a market cap of 8,500 crores at the moment can easily, over the next 5 years, grow into a behemoth, probably going into something like 80,000 crores or something. This could be very big over the next 5 years, because of the kind of numbers it could produce once things really pick up on the economic front, as well as on the health front globally, and travel begins in earnest, etc. So I'll have a detailed video on it in about 3-4 weeks time. But what I can say is, after hitting 416.20, it has given you another opportunity to buy into into it at around 380. You can start buying here. and accumulate till 320, 330. That's a major support. It could go down to 320, 330. There's no nothing that can stop it going down. But over the next 5 years, it can be at least a 5x, if not more. It can be a 4 to 5x from here, or even more if things really get going, because the numbers will keep coming. So is my trip, in my opinion, is a buy at current levels and on declines to 340, 330 levels as well. So I'm ready to answer your queries for the next 7 to 8 minutes. Please use the super chat and super sticker feature. That will help me grow the channel. That will help you also ask me questions and eke out answers in greater detail. Yes. See, if you are short term, Ashim, in the stock, then your stop loss. Well, currently the stock is 383. Probably keep a stop loss at 360. But I would suggest that you buy, accumulate at these levels, and you keep your stop loss at 300 and keep on accumulating between 330 to 380, and wait it out for at least 2 to 3 years minimum on the stock. So Junjanam, I believe Dixon is attractive at these levels. I think it's a buy at these levels, especially with the festive season around, and the fact that the sales figures would be much bigger in December and March. But one thing you have to keep in note is that Tube Investment has gone ahead and bought into a smaller, you can say, camera company, camera of mobile phones. They make camera of mobile phones, and they bought into it. I think this whole sector is going to go through uh, you can say a very stiff competition. So there we could be in a situation where margins may get hit, but around 4100, 4200, if you get the stock, even at current levels, these are good levels to probably buy the stock. And if you have the stock from before, then hold on to the stock. That could be the way to go ahead. Okay. So Priyag, Manorama Industries, I have not checked in detail, but what I can tell you is that the company is decent, but valuations is stretched. Numbers are up and down, volatile. I would suggest, if you have not bought, look at larger companies to get into. If you have bought, keep a strict stop loss according to your risk appetite and the losses you can take, and probably exit the position. Because see, this market since October 21 is not a market in which you can just buy anything and make money. You have to have very you can say astute eye in order to buy something going forward over the next 2 3 years. Look at the 2 3 year picture, and then get into any stock rather than trade into stock. As I mentioned, trading should begin once the market takes out 17,500. Otherwise, one has to stay away from buying into any company. So that's the call. So Nagraju, I would say Minda. I would say Minda. I think Minda is the name of the company now. So Minda is a buy at these levels rather than Sona, BMW, or that company, because comparatively Minda is cheaper and they are growing better, and the charts are much better in Minda as well. So that's the call there. A Root Mobile, see, it came out with very bad numbers for 2 3 quarters. It came out with half decent numbers last time around. The stock has run up. I would avoid the company unless it comes out with couple of big quarters, and I probably buy after it has gone up rather than buying now and probably praying for better numbers. So CG Power I have not tracked. I won't be able to comment on it. Buchi Babu, HEG. If you're long on HEG, let me have a look at the charts, and I'll just let you know. I'm opening up the charts here. Although the company did well when the product prices went up sharply, right now the HEG is around 1100. It has gone through a major correction. I see for short term, I believe the stock is in a very difficult spot. Your stop loss remains around 1080. Your stop loss is 1080. And if things go about right, then 1330, 1340 could be a target that you can look at, but keep strict stop loss at 1080 on HEG. Yeah, it looks weak. The charts look weak there. Saurabh, I would say avoid IEX if you have shorter term time frame. If you have 3 years plus 2 3 years, 2 to 3 years, yes, definitely you can start buying now. Don't buy everything all together in one go. But levels are good to buy, but not for short term. That's the call. See, VGuard has not come out with very strong numbers on many quarters, and that's why the stock has been gyrating in a range. I would say look at other consumer companies to get into rather than something like a VGuard. I've talked about Faircam a number of times. Stock is expensive but may continue to perform. If you have it, then hold. If you don't have it, then probably buy on major declines. That's the call. Okay. So Bata is a buy from long-term point of view, Jajanam. I believe Bata can give you 17, 18%, even 20% if things really go right yearly. So it's a long-term portfolio kind of a stock that you can buy into. Timken, I don't follow that much. Charts look good, but I don't follow as a company altogether, so won't be able to comment on details. Uh, Shalendra KPIT looks good, but you should be patient with the stock. My target is 1100 over the next 2 years. On the stock, 1100, 1200 is very much possible. Uh, at these levels, immediate buy, no. I would say wait for some decline more with the kind of markets we are in. Probably 610, 620 would be good levels to get into. But I feel that the stock is pretty good. The company is good. You should have patience from a 2 years perspective on something like KPIT. So Sheila foam is something, Priya, I can say that yes, one can look at buying at these levels from a long-term point of view. Again, not from short-term. Short-term, the charts look weak. We could go to 2600, so start accumulating. If you have the stock, hold on to the stock for the next 2 3 years. I think numbers should come back once things really get going. Numbers should come back on something like Sheila foams. Kapil Naika looks attractive again from a 2 3 year perspective because of the kind of sales number it will produce. And I think it does look attractive for those who want to play it from the festive season point of view with a stop loss of 1240. So if you keep a stop loss of 1240, you buy around these 1300, 1310 levels. And if you're lucky, you can get 1550, 1600 on the stock in 3 4 months time. Looks attractive now with the kind of sales number it has, around 64, 62, 63,000 crore market cap. Looks good for Nika. So Astral, I have kept mentioning that 2100, 2200 is good. So any 4 5% decline from these levels, one can buy Astral. I think 2000 is a strong support, and next target is 3000 over the next 6 to 8 months on Astral. So on any 100 rupee fall from these levels, it's a buy Astral. A Titan is looking good if you have bought earlier. Not to buy at these levels. It has run up a bit, but it looks like it's headed towards 3000 post the festive season. That's my call on something like Titan. So Munjal Shova, I don't probably track it. I won't be able to comment on it. Okay. KPR Mills, another of those very decent companies that can be bought from a long term point of view, but in this industry, in this textile industry, I'm not that sure that it can command the same PE as it used to command earlier. So I won't suggest that you can probably look at KPR Mills in that sense. But for a trade, you can do that. So Ashim, I don't do on Thursday. I don't get that much time on Thursday evening. That's why I do it on afternoons. I'll try to do it in evening on Thursdays. In night, probably if the time helps me out in that regard. So I'll try to take out time to do it on Thursday evening. I've thought about it, but I don't get time at that point of time. Okay. So Adani Wilmar. So Kapil, interestingly, in all the Adani stocks, the only stock that looks decent enough is Adani Wilmar. But again, it has gone up. I think around 650, 670, it was looking good. It has gone up over the last few weeks. Declines to 720, 730 is a buying opportunity. Again, an investment. This is a consumption company that is doing well, and that doesn't look like having huge debt, although it has debt. So this is something that one can definitely look at. Priyak, Naukri will struggle until and unless Nasdaq and US recovers. I don't know why, but that is exactly what is happening. I have tracked Naukri, I've tracked InfoEdge, the stock, and how Nasdaq has performed. It is moving in the same direction as Nasdaq performs. So, and FIIs are in big time on the stock. So when they sell, InfoEdge go down. I think now with 4200 gone for sure, I think if real selling comes in, we could see 3600 on the stock. But from 2 3 years point of view, the stock looks good, very attractive, and I will not be surprised that in 2 years it goes back to 8000 beyond its highs. So it's a 2 to 3 year play, not a short term play until and unless it takes out 4200, 4300 convincingly. That's info edge. Uh, so that's just about it for the session. I'll be online live on Thursday as well. We'll discuss the time with you all. Thanks a lot for watching. Please like and subscribe my channel and hit the bell icon so you get my videos straight away when I post it. And kindly support me on Patreon. Thank you.